Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
A living legend going again. Robert Quartermain is back with a new gold junior called Dakota Gold. Hello and welcome to Kitco Mining with me, Paul Harris, at the Rural Symposium in Boca Raton, Florida. Robert, welcome to Kitco.
Hi Paul, how are you today?
I am very well, thank you. Now, Robert, you're on the Living Legends panel here. How does it feel to be called a living legend? It sounds to me a bit like being called a living dinosaur.
I hope I'm not a dinosaur. I'm a geologist by training, so I certainly am very well aware of what they are. I think it speaks to the experience I've had in the industry. I've been working in the resource industry since 1976 now. My main focus has been in precious metals since 1977. I've worked in 18 countries around the world, have involved in many mining projects, have built some mines myself, and have a good experience in this industry that I have a great deal of passion for. So if I'm a living legend, I'm a passionate living legend in that regard.
Well, that's obviously very good, and that designation comes because of your history of success and building successful companies like SSR Mining and more recently Pretium Resources. What are some of the key lessons or observations you've made over your career?
I think one thing as a scientist, as a geoscientist, is focusing on the quality of the assets. You have to focus on the geology. If you have good geology that you can turn into ore and put the right materials handling around it, then you can turn a project into a successful mine. And so over my career, I've drilled many projects, and you have to know when to stop drilling. And I think that's one of the things I learned, is that you may find a good mineral system and hope that it may turn into a mine, but frequently it won't do that. So in our case with Silver Standard, which I was involved with Rick many years ago in the 90s building, we picked up many projects which at the time previously been uneconomic, and we did work on them. And of course, ultimately we put the Perquitas project back in production, and although it shut down, it's still operating, the mill, I believe, now. And so I think that's one of the things that comes with time and experience, is working at mines, understanding what they look like, and then being able to say no to a project, but more importantly, when you find something like Pretium, being able to say yes, and then take it all the way through the whole aspect of development into production.
Thank you. Now, I was fortunate enough to see you present at the New York SME event in New York in May, when you were talking about the development of Pretium and some of the key things that stand out or stood out for you in that development. And it wasn't just the fact you brought a gold mine successfully into production, it was how you did it. In terms of, I believe I recall you saying there wasn't a single lost time accident during the whole of the construction. You put in quite a long electrical connection, very complicated project, again executed on time, on budget, and without any lost time injuries. It's quite an incredible thing there.
Right. I would say with the mine itself, we certainly had some injuries, and there was unfortunately a fatality during part of it. But the construction of the power line was something we were quite pleased with. It had been a power line over almost 70, 80 kilometers long from the sea level all the way up. But you always focus, if you're doing this industry, to make sure that you have a safe environment for everyone to work with. But it was the challenges in putting the Brucejack project in, as you point out, high in the mountains. I had to bring everything in, had upwards of 1,800 people working on there, largely in a safe environment all the time, and being able to advance that over a very short period of time. And a lot of our success came from not only the team we put together, but also our engagement with local First Nations who were supportive of the project, as we had a lot of employment with First Nations there. When I started, it wasn't large, but when I left, we were between 30 and 40% First Nation employment. So they saw the opportunity of having this mine in their region, being able to have local employment, and I think that certainly spoke to the success that we had at Pretium in the development of that project.
Thank you. Now, you're now co-chair of Dakota Gold. Does being a living legend give you better access to projects, to finance, and to people?
I think so. Again, the great thing about being involved with a project like Dakota Gold, which is in the Homestake district, and Homestake was, of course, one of the largest gold mines in the world, certainly the largest and deepest in the United States when it shut down in 2002. And we're fortunate that Jerry Aberley, who is our Chief Operating Officer, and James Barry, Chief Exploration Officer, both worked at the mine, and they're back working for us and on the team, which is headed by John Odd, and of course my co-chair is Steve O'Rourke, who's from the region. So we have good individuals there who've been attracted back to that, and you're quite true. I think because of the success that I've had both at Silver Standard and again at Pretium, it helps us as we go out and source capital. We have a great loyal shareholder base. We've been able to attract a great shareholder record. We also have management who has a large position in the company. But more importantly, to your point, as we continue to evolve it, I know the sources of capital. I know where I can go to speak to people who will be able to come and join us and collaborate with us as we develop this very exciting story in the Homestake district.
I think that aspect cannot be understated because we're in a very difficult market for raising capital for junior gold explorers. So having that knowledge and the ability to navigate that is, I imagine, a clear advantage. Let's talk a little bit more about Dakota Gold and the project. What is it you've got and what are you looking for?
Right, so we've staked or have acquired over 46,000 acres in the old Homestake district. 13,000 of those are in private land, and that's important from the fact that you're able to get your drill permits relatively quickly. We can permit within about 60 days. But the interest that I have in the project, and I'm the largest shareholder, and certainly the whole management team, is the opportunity, which is a long trend or a long strike of the old Homestake mine. As I said, it mined about 40 million ounces over a 125-year period at high grade, a little over what would be 8 grams or about a quarter of an ounce. And we have the strike extent on our Maitland project, and we've been drilling it since January of 2022. And we've had some great successes. We announced earlier this year the discovery of the JB zone, which is Homestake mineralization. We're about 3 miles north of the old mine. So we've shown proof of concept, and that's key. It now means finding more of that material, and it's that material which occurred in the gold ledges which made up the mineralization in the Homestake mine. And in addition to that, we've intersected some tertiary mineralization, which is much younger. And in our Unionville zone, which we announced in February, again, we had intersections of potentially economic gold mineralization in younger rocks. So when shareholders buy the asset or buy the company, they're getting exposure both to the Homestake district mineralization we're working on, as well as this new Unionville type tertiary mineralization we have. And then up at Richmond Hill, we have lower grade surface material where we announced a result in June where we hit upwards of 0.029 ounces of ton over 300 feet. So again, lower grade, but near surface, and similar to the mineralization that Wharf is mining. Wharf is being mined at the core mine, which is 2 miles away from us. So lots of potential opportunity in this gold market with respect to different mineralization types, which we have in Dakota Gold at the Homestake district.
Excellent. Now, critical metals is starting to get increasing support from the US government. Is there any love coming from the government for gold mining? Or is that sort of falling out of favor?
Oh, no, I would say, South Dakota is a very good place to be. One, we're in a historic mining camp. It's often said the best place to look for gold mines is in the head frames. I can tell you there's many head frames around Lead, South Dakota, where we're operating at. But more importantly, you have a favorable government. You have the Wharf mine operated by Core, which is located just a few miles away from where we are established. We have our head office. We are a U.S. listed company based in Lead itself. And so I think it's a great jurisdiction to be working in. And, I wouldn't have come out of retirement and invested in this asset if it wasn't something I believed we had all the right components to it. We have people, we have location, we have a favorable jurisdiction, and those will all speak to our success going forward.
It seems to me, in my sort of 20 odd years being in the sector, that successful people in the sector never retire. They just have a pause while they're waiting for the next opportunity to come along. Mm-hmm. Okay, now timing is everything, and you've been through many gold cycles. What are your thoughts on where we are in this cycle and where we're going?
Yeah, I mean, right now what we're seeing is there's a bit of a divergence between the price in the equities and where the gold price is. Often people say the gold seems to be, or equities are discounting perhaps a $1,700, $1,800 gold price. I've taken view that the market is pretty sophisticated in ensuring that it's pricing appropriately. Everyone is feeling perhaps the pressures in this space. But having been through the market adjustment in 1987, I started running public companies back in 1985. And as I said, I've been in the business since 1977. There have been other times, particularly in 1996 to 98, when gold price was down at $250 an ounce, which is why the Homestake mine closed down. Those were certainly very challenging times. In this case, if you have a good project and you've got a good asset, there's always capital that will chase it. And so it's a matter of, as we were talking earlier, people often think they're undervalued, but the market is usually good at pricing. If you're undervalued, it tends to be most of the market is the same way. So I would think in this current gold cycle, I would hope that we're flattening out within it. My exposure, of course, with my holdings in Dakota Gold, but more importantly across the sector, I'm very much vested in gold and believe that 5 years from now we're going to have a much higher gold price, and I'm going to be rewarded by maintaining my position, much the same way as when I first bought my gold equities back in the 1980s. It's been a rewarding space for me to be in. I'm comfortable. We know that it has some volatility in it, but at this point in time, I think we should see some stabilization of it from a personal perspective, and then just look to future positive gold prices going forward.
Thank you, Robert. It's interesting. I think you're spot on there. The market tells you what your valuation is, but it seems that therefore that a lot of juniors or CEOs of juniors perhaps have an unrealistic idea of what their valuation is or should be. For you, what are the sort of fundamentals for building value in a junior company?
Well, first is your underlying asset. You have to make sure that your geology is good, and you have the asset. Then you have to look at your location. Are you in an area where you can get permitting done relatively easily? Because ultimately you want to develop this asset into a producing opportunity and return capital back to shareholders. And then the other is people. And that is one of the challenges that we have currently in the industry, is access to good talent. I'm 68 years old now, and I've been doing this since 1976, and still, as you say, have a passion for it because it's a competency they have, and I'm very much enjoying it. But it's getting people into earth sciences. Where are we bringing up the students in schools who are going to go to universities and are going to come up with the skill sets and the competencies that we need for the industry? And so I think that's one of the things, the challenges we're going to have going forward as an industry, is making sure we have the individuals who want to come in, do mining, being able to do those extractive industries, which we need as a society going forward. Your computer that you're working on, or the cell phone that you have, has upwards of 80 different elements in it, including gold. And gold, we can argue, is a strategic metal because it's used in everything we have from an electronic perspective because of its unique characteristics. If you try applying electric current to it, it doesn't spark, so it won't oxidize. So it can be used in all the small capacitors that we need in electronics going forward. And so again, when you talk about being in South Dakota, we're happy because, currently gold is being mined there through WARF, and hopefully we will at some time be able to advance our projects through and be able to provide that local strategic metal that we need in our lives every day.
Thank you. That's an interesting point you make about talent and the difficulty in recruiting and retaining talent. In terms of young people, the cost of living crisis, studying for a degree is getting more and more expensive, student loans, debt load, that kind of thing. Mining engineering degree is not a cheap degree to do. Should miners fund more scholarships or other financial assistance to get more young people to study earth sciences?
Well, you bring up a good point, and I would say yes. And personally, I do that. I graduated from the University of New Brunswick, which is in Canada, the eastern coast, and I've given back. I fund 6 scholarships at my alma mater for that purpose, is that we have to make it easier for earth scientists to be able to come in, join the industry. But the nice thing about industry, it is relatively high paying. When you get a good mining job, that can provide a career for someone, and a career and a talent that is transportable. Mining occurs all over the world, so it certainly was something that I appreciated early on in the start of my career. I was able to travel extensively because of that. But I agree that we as an industry have to continue to promote mining, and it's something we do in Canada through Mining Matters, where in the schools, children and students are able to learn at an early age that your everyday life needs these metals. And so if we're going to have them, then we need individuals and talent who want to go out in being able to work in this industry and help us with those extractive industries to create this greener world that we all want. It's the copper, it's the silver, electrovoltaic cells, what we're doing with EVs, all those still have to come out of the ground to be recycled, and we need good earth scientists to be able to help us do that.
Thank you. Now, What's your view on how the gold sector's evolved in recent years? We've seen several mega mergers. Are there more to come, do you think, or is that that consolidation moment past?
I mean, there's an opportunity for, continued consolidation in the industry, because often the only way that the majors, the larger companies, can grow is through those mergers. We haven't often been good at exploration and finding, new mineral systems coming in. And some of the majors have set, fairly high benchmarks in the quality of the assets and the size of the assets that they need to be able to find in order to continue to grow their companies. When mining companies are producing, many millions of ounces a year, and you have the average grade of a gold mine being a gram, you have to be moving a lot of material. And so what we could see is more movement in the mid-tier space. So rather than being those companies which produce millions of ounces a year, but perhaps in the hundreds of thousands of ounces, and you can get some synergies there. I mean, the one challenge is we know it's getting much more expensive to run public companies. And there's a lot of money that can go from shareholders into supporting those companies, but often has to go into management of the same. And so I think, merger activity is probably something that would be good for the industry. But as you point out, at this point where share prices are down, people are often reluctant to do that. But this is the time where sometimes 1 and 1 will become 3, and in a rising gold price, shareholders will be rewarded. I mean, the main theme at this conference, Rick has always spoke about, it's delivering value back to shareholders. And one has to look at what are you doing as a management group, which is delivering the best value. It's something I certainly learned at Silver Standard. And we grew that by picking up and merging with other companies and picking up assets from other groups. And so we have to look and say, ultimately from a management group, what's in the best interest of the shareholders, not of the C-suite, and ensure that that's how you manage yourselves going forward at a time when, we need to be putting more money into the ground than perhaps supporting C-suites in that regard.
Okay, thank you, Robert. Now, a lot of the big companies they want tier 1 assets. By definition, those are very rare and special assets. Obviously, not every junior's got one of those. So is the quality bar potentially too high? Because at the end of the day, it's all about making money, not necessarily having a huge gold resource. Is there a sort of disconnect between expectations and reality?
I would think to a certain extent, and you, I think, hit the nail on the head as to why I'm involved with Dakota Gold. The Homestake mine was a rich gold mine, 8 grams or more operating underground, and that's what we're targeting down there. You want high grade, which is able to help. And a high grade mine may not produce a lot of ounces, but if its margins are high, then it's going to reward shareholders, because ultimately this is a business. We have to return capital back to our shareholders by way of dividends as well as capital appreciation. And it's the same thing I use in my own investment strategy going forward. But in my career of working in the industry, since 1977, a lot of the harder, easier mines to find aren't as available to us. Now we're fortunate up in the Golden Triangle in British Columbia, where the Brucejack mine was found and evolved and developed relatively quickly. So there are probably assets like that around, but when you go to established mining jurisdictions, you're right, they're often deeper, they're going to be more costly to bring up, and then to find those large mines that can produce over 500,000 ounces a year in one single location becomes much more challenging. And so therefore, the major companies either have to continue to develop their own portfolios and be able to put more throughput through in perhaps existing mines, or have to have more smaller mines but better margins and return value back to shareholders in that regard. Large for the sake of being large isn't often the best. It's, as you point out, what's the return of capital back to shareholders? How profitable is that mine going to be?
I think it's going to be interesting to see how this plays out in the years ahead. I think you made an interesting observation there, that sometimes, or perhaps, juniors are too cheap for M&A to happen, because the managements and the boards, even if you get let's say a 50% premium, they still think there's far too much value being left on the table for the underlying value of the asset. How can we get past that?
I think, it's again something I was taught here many years ago as well. the market is fairly good at pricing in what value is. And so if a management group thinks that they haven't got the right value, then they need to get out and get into the marketplace at conferences such as this to be able to speak about what that value is. Or the market will make that determination, and it's up to other groups to be able to look and say, listen, if we put these two assets together, we're going to find more value to our collective group of shareholders. And that's certainly a philosophy that I had while I worked at Silver Standard and looked at Pretium. It's focusing on the owners of the company and getting the best return back from them. And it's the same philosophy we'll have at Dakota, being a large shareholder, the largest shareholder. It's about ensuring that you get a return from your business back to the owners of the business.
Okay, thank you. Robert, as we're sort of running out of time here, let's close with, what particularly interests you and concerns you in the junior gold space right now?
One is discovery. We are seeing some interesting new discoveries in gold. Perhaps it's a little more challenging. We're seeing some good discoveries in the copper space and also in the lithium space. So for the strategic metals we need going forward, we are seeing discoveries happening because we're now turning our attentions and capital to that. That's positive. With respect to the gold space, as I talked about, it's talent. About bring the talent in that can go out and do the work that's needed, coming up with perhaps new methodologies to go out and discover new gold projects in different jurisdictions. But I think one of the concerns are those jurisdictions. You have governments now post-COVID who are looking for areas to raise capital. We're seeing increases of local taxes. You can't move the mine, and therefore you have to make sure that the jurisdiction you're going into is one where hopefully you have rule of law and that those rules will stay. We know they can always change. Taxation of mining opportunities is certainly something that can be a target going forward, and we've seen some of that over the last few years. So those are all concerns as an investor is looking at that jurisdictional aspect of it, looking at the teams and their experience to be able to advance a project forward. But I think ultimately, I've been in the commodity and resource space most of my life, and I believe that we're going to continue to see positive improvement in the gold price because we need gold. As I said, it's a strategic element as well. The same with copper going forward. People talk about Dr. Copper. We heard that spoken about here yesterday. I remember when it was 60 and 70 cents, it's now at 370, 380 and going higher because we need it in the world that we want to see going forward. And so long term, I feel very positive about where we are. We just often have some of these slower issues that pop that perhaps slow down that cadence at this point in time, but one has to be a long-term investor in the space. My speculation days are over. This is where I invest and spend my money because I believe long-term copper and gold is a good place to be.
Excellent. Well, thank you very much, Robert. It's been a fascinating conversation. Robert Quartermain, co-chair of Dakota Gold, thank you very much for joining us today.
Great. Thank you, Paul.
And stay tuned to Kitco Mining for more from the Rural Symposium in Boca Raton, Florida.
Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.